Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Wednesday, October the 9th, 2024. As promised, today we'll do a special about Ethereum, MARA, and RIOT. We have covered Bitcoin quite extensively, and we still stuck between the three wave counts we're tracking to B wave or not to B wave. That is the question, right? And as long as we stay above the September 6th low, for that, we can still reach 75, 85,000. We should enter a bullish season, but seasonality has been pretty much put on its head. So we might actually enter a bearish season to be determined. The price is the final arbiter. So while we have not been too positive about Ethereum and the miners and therefore not covered them, there are, of course, developments going on behind the scene. I always track them long term to short term. I look at what other people are doing. Am I wrong? Am I right? Etc. And at some point, if there is 2, 3, 4, 5, maybe 6, 7 weeks or months of more data available and never update, things can change. So let's have a look at the charts. And before I go there, let's start off with an article from Fidelity, where they say that Ether's portfolio metrics closely resemble that of Bitcoin. All right, no surprise, but with a 4-year lag. It is interesting. I've not heard that before. Maybe some of you has. So it allows investors to potentially capitalize on early cycle gains. So we are in 2024. That means with a 4-year lag, Ethereum should be somewhere close into 2020, right? We go back 1 year, 2 year, 3 years, 4 years. So Ethereum should be somewhere here, which means there is still potential upside of about 500%. Back in October, Bitcoin was at around 10,000 and it topped at about 65 to 69,000. Okay, so it's a little bit, of course, versus that 9,000 or 12,000, which makes a big difference. So let's say another 500% potentially upside. If that's the case, I have not heard this thesis before. I have not put it to the test either. I just read this article, but I thought I'd bring it to your attention. So the conclusions are that Ether may have added benefits to your portfolio, but it's not suitable for all investors. Of course not. That is always the usual disclaimer. And that Bitcoin and Ether, if you would read this article, and I'll send the link in today's email, they continue to diverse technically, socially, and financially, which is really nice as they continue to mature, offering investors even greater portfolio diversification. And that's, of course, in line with what I have always said. Bitcoin is the currency and Ether is the network over which the currency will be transferred. They're quite two different things, and this article really points that out. And there's a lot more behind it if you find it interesting to read about it. I'm more a price only guy, but of course I am dangerous enough. I know enough about little. And again, the dominant network effects of Ethereum are a significant reason other smart contract platforms, which is what it is, right, have a continuously harder time catching up with Ethereum. I agree with that one. If anything, Ethereum is the leader of all altcoins. Everything else is just a meme coin. That's really what it is. And I cannot recommend investing in meme coins unless you put in a tiny amount and are willing to lose it all. So you have to look forward and look at early cycle gains, which is those 4-year cycles we, for example, identified for Bitcoin, and which I haven't identified yet or been able to identify for Ethereum. Maybe with more data coming out, of course, every single day, that we might eventually also identify a 4-year cycle, with each year being a early bull, a mid bull, mature bull, and bear market. So you should judge whether an allocation to Bitcoin fulfills your investment portfolio. All right. So this is a very interesting, and I think it also shows, if we scroll up a bit, that actually Ethereum outperforms Bitcoin. And that is correct, because some of the gains Ethereum has had are much more, look here in blue, Ethereum, than Bitcoin. But Bitcoin has been around longer and is maturing more, and that's why Bitcoin's volatility is declining faster than that of Ethereum. So with less volatility, you will see less price gains. So Ethereum might be a very good addition. So read the article and see what you think. I think it's quite surprising. So there might be at the tunnel of light at the end of the tunnel here, and that is really good. So let's have a look at the price chart then. So this is the wave count we've been tracking, which I've feel is starting to fall apart a bit. The 1 2 1 2 3 4 3 4 setup. It's technically still okay. There are a few issues with it. The current decline is almost too much for a fourth wave of this degree. It is even larger and longer than the 1 degree higher second wave, if this wave count is correct, is red wave 2, intermediate wave 2. So then we came up with one of the alternatives is this continuation triangle, a B, and a C wave lower. And the C wave can still go lower. It doesn't have to be following this trend line, but more about that trend line in a moment. We can still go all the way back here to about 900. All right, we have that wave count, of course, also on the charts and on the table. We kind of want to see probably the RSI 5 on a monthly basis getting oversold. Every single time it's happened since Ethereum's data is available, 2015, and probably when it started trading, that has been a good sign of long-term gains. So here is then the weekly chart, no Elliot waves, and this is a trend line that holds the 2022 low here in June, all those lows in check. Might probably have to adapt it a little bit. It's there, something like that. All right, you can see it. This is a little better touches of those trend lines, but you get the idea. So then from there, if we've got a breakout from the basing, a breakout from the basing, a breakout from the basing, we got pretty good gains, 50%, 64%, and 122%. The average of those three is about 80%, which would target somewhere in the 4,900 range, which would recapture the bounce high here in 2021. So that is still possible, but again, we have no breakout. We did bounce from the trend line, okay, several times. So this is a weekly candle chart. Again, the wave count here is if you would do it, quite overlapping, right? It looks more like ABCs. But we can still move higher, but we need to break out to above 2722. For those that have been with me for a while, remember that 2800 has been my bull bear line in the sand. If we go above 2800, I think the low is in place. And indeed, then we can look for 4800. But on a weekly price basis, we can lower that level to 2722. So the 2800 was pretty darn accurate. It is simply based on these peaks here, right? That is fine. 2722, 2800. So we need to see a weekly close above it. If we do it, we're probably going to follow something analogous to what we had 3 times before. So this is good. This is constructive. Of course, if we fail to hold this trend line, again, we can start to look for 900, potentially indeed as low as 200. Okay, then this was all a large B wave, a B, and a C. Then we topped for cycle 3. Then was primary A, primary B. Cycle 4 will probably go back here again to 800 to potentially 200. Yes, we can go that low. So it really hinges on getting back above that 2722 level. Okay, that would be really nice, but there is no guarantee, and the charts do still look weak. Also here, this monthly chart, but I wanted to point it out. So there is some light at the end of the tunnel, and this whole different analysis from Fidelity is also another line of evidence, which I like. It's like non-Elliott wave based, way different correlations and comparisons to other indicators, and I don't know what. So I just wanted to make you aware of this, how other people and institutions are looking at Ethereum, that indeed all hope is not lost. And of course, they also mention here that, of course, with Ethereum, you can stake. What is your return? 3, 4, 5%, something like that, which is nice, but probably a regular savings account can make you more, and the stock market makes you more, and gold and silver will make you more. But I've pointed it out enough that you should definitely diversify into those indexes and asset classes as well, though very few are in gold and silver. Take a look at oil, for example. Are you in that one? As oil prices rise, why not buy a oil ETF and make sure that that way you can pay for your more expensive tank of gas? Yes, you can say we can go electric, but electricity prices will also skyrocket. All right, on to RIOT. This is the most bullish wave count we can get. So we have a 1 here, a 2 in late 2022. We have then an A, a B, 1, 2, 3, 4, 5 lower. Nice for wave C. And now we had a impulse higher, 1, 2, 3, 4, 5. And now A, B, C lower into this support zone, the green zone. Haven't changed much on this chart at all. And as you can see, we've reached right here to 76.4% retrace. That's quite nice. If we zoom in further on Riot, it looks like we're completing a ending diagonal wave C. Potentially has already completed late this summer. I believe that is early September, September 6th low probably. We do, of course, need to see price break above the moving averages and especially this downtrend line, because this wave 5 can always subdivide. If this is indeed an ending diagonal, then this is could be A of 5, and then we're B in 5, another C of 5, going all the way to $5, for example. Okay, we can go all the way back here. But again, this looks still like a nice impulse higher, and then the A, the B, and the ending diagonal wave C. So at current levels, I would say the upside reward is potential. The upside potential reward is 35. Which is almost 500%, a little bit less. And the downside risk is to about 5, which is still 50%. Okay, so about 50% versus 500%, 1 to 10. Again, I'm not making any buy sell recommendations. Take that into consideration. I have the warning levels for the bulls here on the weekly chart on the map. And I really want to see, of course, price break above this downtrend line first and get above the Ichimoku cloud, especially the 200-week moving average, to really be confident that this wave 2/B in black has completed. Again, it does look nice as a ending diagonal. Ending diagonals are tricky and overlapping, so we have to be patient. Again, the ABC lower at the September 6th low could be all of 5, but we can only have also A of 5. And then B of 5 and another C of 5. Okay, as you can see here, ABC for 3, ABC for 4, and then an ABC for 2, etc. It's all ABCs. So I think there is light at the end of the tunnel, but I have no confirmation that we have left the tunnel. That's the point, but it starts to look better. Okay, this is as good as it gets. This is at this stage. And this is why we continue to say, as long as the September 6th low holds, and it pretty much goes for any asset class that I've seen and analyze, the gold, the silver, and all those things, the indexes, of course, and of course the cryptos, as long as we stay above those, then a low is in place. But I have no confirmation yet. No confirmation, especially not for Riot and MARA. So here we go for MARA. This is the preferred wave count, bigger picture. This does look still like 5 waves up from 2020 into 2021. Then an ABC lower into the end of 2022, leading diagonal 1, 2, and then another one. And now in this wave 2, it's a slow grind, lower as well, right here at the 76.4% retrace, but no signs of a bottom being in place. That will require, of course, ultimately a break back above about 28. Alternatively, so this is the most bullish wave count. Alternatively, then this was a 1, as you can see here, of a diagonal 1, 2, 3, 4, 5. Alternative, so I have this is a 1 and this is a 1, right? A 1, 2, 1, 2 setup. This is all of 1. This is all of 2. Can easily go back to the low 10s for this C wave of wave 2. Then we have A, B, C. Okay, to the 76.4% retrace is at 1034. And then from there, we can then target somewhere in the 60s for a C/3 wave. To be determined, I have no signs that a low is in place. And I have the warning levels for the bulls here on the chart. This is the weekly chart. And obviously, we need to get back above the 200-week moving average, will get us back above the Ichimoku cloud, which once again is at the minimum 2021, but ideally this 27.5 level. Okay, from 27.5 to 60 is still a double at least. But for here, we can see downside risk is $5 per share. In this wave count, and upside reward is $50 per share. So it's about similar as for Riot. So again, this starts also to look reasonably good that we're completing a corrective price pattern. The worst case scenario is that all we got was a B wave and double zigzag AB, ABC into the 61 to or 38. No, sorry, this is 50 to 38 8.2% retrace, something like of this entire decline. And we're now in wave C, going back pretty much all the way to zero once again. It's not my preferred scenario, but it is definitely possible. Okay. That's why we need to break above these key levels at the minimum above 20. So this is the weekly chart, and ultimately really above 27.5, because then we're making a higher high. Higher highs and higher lows are always bullish sequences. As you can see here, higher highs, higher lows. Okay, higher highs, higher lows. But now we're starting to make lower highs and lower lows. That trend needs to be reversed. So I have zero indication a low is in place. Some of the analysis can suggest it, but I can't confirm it. So with that, it does look, well, some of these wave counts really start to tell us that we're getting pretty close to the end of this bearish tunnel. Even if we still see $5, it's pretty darn close. Then there will be the final C wave of a fifth wave of a wave 2/B. And remember, it's perfectly fine to go all the way back here to this support. It's perfectly fine. That's okay. It's quite deep and steep, but as long as we stay above the 2022 low, we can then allow for a very good rally into the 30s, potentially 40s for this wave 3/C, because that is, of course, ultimately still long-term resistance/support, depending on if we bulldozer through it, then it will become support, or if we're just going to nip and tuck it, so to say, and that's it. So there is definitely light at the end of the tunnel. Fidelity still has faith in Ethereum. Many good metrics that say Ethereum can certainly outperform Bitcoin going forward, that they're two different entities, and I fully agree with it. Absolutely. I personally prefer Bitcoin, just to have more data available on it, but Ethereum does start to look reasonably good. Yes, we can still go to 900. Yes, we can still go to 200, but long term, there should still be upside potential for a wave 5, even if that wave 5 is a cycle 5 or a major 5. That is to be determined. It's quite odd for Ethereum to top without any negative divergence. Yes, we did get a higher closing basis, but not a intra-month higher high. So this is a little awkward top, which does suggest it's a B wave top, and that we are now in this C wave lower, which should hopefully complete soon. But we can still see lower prices on Ethereum. Okay, just because we're liking it, that it has higher returns than Bitcoin and all those analysis, price is always the final arbiter. So please always use that for your entries and your exits. And again, Riot looks pretty good. We kind of potentially completed this wave 2. We might see another ABC lower as well. That's the trick with diagonals, hard to fully nail down. So ultimately, if we get back above these critical technical levels, especially I would say, or at the minimum, probably 13, but especially about 20, somewhere there, then I think we can easily target Riot 35, 40. Same for MARA. I want to see it go back above 28, and we can then target much higher prices, at least 50, potentially 65 for starters for a 3/C. That's all I have for today. I hope you enjoyed this update. Please read more about Ether and why Ether can outperform Bitcoin in the future, contingent on holding above critical price levels. Take care, trade safe, and I'll catch you all tomorrow.